Hello, this is Jordan. This video is being recorded on the late evening of Sunday, February 12th, 2023. Thank you so much for joining me. In this video, I'm going to talk about the key levels for gold and silver, as well as the miners this coming week. Okay, so a couple weeks ago, we got the hard reversal in precious metals. They've put in some kind of an interim top here. And with respect to gold, if you watch my last video, the right around 1800, maybe a tiny bit below, call it 1790 or so. There's a lot of moving average support coming into that area. And also, if you look at this rebound, the 50% retracement is right around 1800. If you look at that comparison to the 2018-2019 period, gold had that, or the end of 2018, gold had that move up into January. Then it corrected for several months before the Fed indicated they were going to cut rates. Gold held up really well during that little correction, even though silver and the miners really did not. I remember the sentiment in May before that happened was just really abysmal. It was awful. So just thinking about it, relative weakness in miners and silver can throw you off, more than occasionally. But, I'm getting off track as I normally do. But so looking at gold, all along the key levels have been around 1835 and then, 1800, maybe even call it 1790. We can see the 200 days at 1784. It's flattening out, probably going to start to turn up. And if you look at my, I think it might have been my last video, looking at support around 1800. You have not only the 200-day, you have the 400-day and the 40-month. They're all coming in around 1800. And then if you go back and you look at the 3 or 4 tops from 2011 to 2012, every secondary peak, but the first peak in 2011, those all came up to 1780 to 1800. So that's another reason why around 1800 is such a significant level for gold. I do think gold is going to test it, but with respect to this week, if gold trades down to 1830, 1835, immediately, that could be a level where it bounces. Looking at, if you look at the top right there in the thumbnail, that's not good price action there recently. So that tells us, 1890 to 1900, that's going to be resistance on any rebound. So maybe gold drops to 1830, 1835. Then if it can have an oversold bounce, 1890 would probably be resistance in that case. So that's where we are for gold. Looking at silver, gold-silver ratio steadily climbing higher since the very end of December. Just about at 85 now. Of course, silver, that top and that decline, just the price action since the beginning of the year has just been especially ugly. Note that, looking at the slope of long-term moving averages is really important. You can see the 200-day for gold. That's the slope of that is now flattening out, so it's probably going to curl up at some point. Whereas if you look at silver, the 200-day is still sloping downwards. So that's going to be less significant if you're thinking that silver is going to bounce off the 200-day and rocket higher. It's just the odds of that, based on the slope of the moving average, are just really, really low. Also looking 22 is obviously a significant level for silver, but also looking at 19 and 20. And look, we get a big correction here, even if gold falls below 1800. If silver comes down to 19, and, if you look at it with a bird's eye view, maybe it's a double bottom. But if silver can stabilize above, what we saw in the summer and fall of 2022, that's going to be a higher low. That's going to give it a really solid base. And so, again, this is just supposed to be what's happening next week. But looking further out with respect to silver, it really could be the beginning of something bullish. It's obvious, master of the obvious here, but even if silver comes down to 19 or 20, If you tell me it's not going to go below 1920, then I'll say, okay, at some point, 3, 4, 5 months, that's when you're going to want to get in there and get super bullish on silver. Maybe that's coinciding with, gold turning up and the market sniffing out that, fundamentals are getting more bullish because the Fed's going to have to stop, blah, blah, blah. I'm getting ahead of myself. But so silver, I mean, the key levels are 21, I would say. Obviously 22, but that's right about where silver closed. There is support, lateral support at 21, and the 200-day is there. But for stronger support, I'm looking at 20 and 19. Okay, now looking at the miners, 2 weeks ago they had that gap down, which you really hate to see. I mean, if you look at the last couple years and you look at rallies and then the highs from the rallies, and then they start to sell off, then there's like a big gap down at the after the first couple of days of sell off. It's just not good. So looking at key levels for the miners, so GDX closed below 30. I'm looking at 26. You can see the moving average there. It's not, maybe it's starting to flatten a little bit, but I'm still looking at 26 for GDX. Maybe even 24, 25-ish. GDXJ, the levels I'm looking at are 32 and 30. And for SILJ, there's a lot of support at 10, but I just don't see it holding that. So then you'd have to look at around $9, maybe a little bit below. So that's where we are. I mean, we're in a correction. The recent price action is not good. We don't have sentiment updates for. We don't have the COT reports. They're a couple weeks late. On the fundamental side, it's just going to be really fascinating to see the markets discounting some disinflation, which doesn't mean deflation. It means the rate of inflation is going down. That's best for stocks, bad for precious metals. And as long as that's the narrative, and you have all these bread thrusts in the stock market, that's taking money away from gold and in turn taking money away from silver. So I think, and I've talked about this, you could see bonds have a big sell-off here, which could be a humongous bear trap. So I guess my point is, we could see some weakness in precious metals over the next month or two. But beyond that, if there's no cyclical bull market in the stock market and, the economic data gets a lot worse, then the market's going to start to sniff out a recession, and you're going to see bond yields really plummet. And I mean, that's what the Fed can have all this talk and say what they want, but they follow the market, and they've been able to continue to hike way longer than I expected because that's what the data has supported that. But they always follow the data in the market, and if the market starts to sniff out a recession at some point in the next couple of quarters, you're going to see a huge rally in bonds, and yields will come down, and that's really bullish for precious metals. So I guess my point is the fundamentals and technicals, in the very short term, they don't look that good for precious metals, but on the horizon beyond that, there are some potential really, really positive major catalysts. Because if you get anything more than a mild recession in the next 9 to 12 months, precious metals are going to have a huge break. Gold's going to have a huge breakout in the next, 6 or 9 months based on that timeline. And it's going way above 2100. So keep that in mind. All right. I got a little extended on this video. Didn't want to make it too long. Let me know what you think in the comments. And thanks for watching. And if you already haven't, make sure you subscribe to this channel. I would really appreciate it. Talk to you guys again in the next video.